The year is wrapping up and many will be making financial resolutions for 2023. But experts say don't wait until January 1st to try to pin down those money moves. Nelson Bradshaw is a money management advisor with Farther, which is a local wealth management company, is joining us this morning. Good morning. Thanks for being here. We appreciate it.
Good morning. Glad to be here.
All right. So we're getting closer and closer to the end of the year. And so as a result, there are some things that our viewers would benefit from. And let's talk a little bit about the IRS requiring distributions from IRAs as an example. What do our viewers need to know about those distributions? Is it too late to get those in before the end of the year?
Well, they do have to be done by the 31st, but they're often referred to as required minimum distributions, or RMDs, and you have to do those 72. You have to start taking that money, and it shows up as income, and that's why some folks delay it, although there is legislation that next year is going to move back a year.
But that is something then that someone needs to do that fits into that age bracket then by the end of the year.
Yes, and the calculations of that's one of the advantages of working with a financial advisor is because those calculations can be tricky to know how to do that.
Okay, so keep that in mind. Now let's talk a little bit about, oh boy, I mean, I know that you and Daniel actually joined us a few months ago and we were talking about the up and down when it comes to the stock market and investments. As investors are looking ahead to 2023, is there anything we can smile about? I mean, what should they be doing when it comes to the portfolio?
Well, it was a very unusual year in that this will only be the third year in the last 96 in which both stocks and bonds were down. They usually work against each other and help moderate a portfolio. So one of the things that we're talking to about clients this year is you might want to go ahead and harvest some of those losses. And again, this is where you really need to work with an advisor like someone at Farther to sort of that strategy because it takes more in looking at your own tax situation, not just the fact that you can take those losses this year, but often we'll redistribute the portfolio, give you and prepare you for the next year, because we do think next year is actually going to be a pretty good year.
Oh, good. Boy, that is just great to hear. And just to clarify for our viewer at home who may be a little bit confused, so there is a suggestion that if you had some stocks that really were losses, perhaps selling those before the end of the year because there's a tax benefit.
Correct.
Okay.
Yes.
Let's talk about charitable contributions. You know, there are many companies or even many individuals who wait till the end of the year to do that. They need to get it in by the 31st.
By the
30th, because it's Friday,
there is a little bit of a trick that if you, especially maybe if you got a bigger bonus or something, you want to put a little extra aside. If you don't want to make those decisions today, you can set up what's called a donor advisor fund. $5,000 or more generally to set one of those up, and take the deduction this year and make the contributions in the future.
What planning considerations should viewers be thinking about for next year?
Well, again, the tax considerations for what you're doing, you always want to be looking forward in how you handle those. There are some things that are coming down the line. We're still getting the details with some changes to the tax laws as it reverts to our investments, and particularly the IRA. One of the things that you might want to do, though, is that if you have a regular 401k IRA, is to convert it to a Roth, because the Roth, you're not taxed on the gain of that over time. And when stocks are down, you're taking the gains you have to this year from the conversion, but you're getting the upside. So that's one of the major strategies we're looking at for clients.
So I know that you've been following this, and so have we certainly, particularly over the last month or so. There was a special session in the legislature, and now the bill has been signed into law where there's going to be some changes to property insurance. How that really kind of applies to you and what you do, and to me as a property owner, and many of our viewers as well, is that we need to anticipate the fact that this is not going to be immediate a fix, so this can affect us financially come the new year.
Yeah, well, again, part of financial planning is budgeting all the way around, and so insurance could be a major aspect. In the condo that I live in, we already know that it's going up 50% for the property insurance. So what the state did was really trying to help put in some buffers for that, but regardless, they're going up. It's just a matter, the closer you live to the water, generally the more expensive it is. But
yeah, keep that in mind. Everything seems to be costing more these days. Nelson, thanks for being here. We appreciate your advice.
All right, thank you.